Well, Chairman and co-founder of Motilal Oswal Financial Services. Raamdeo ji, good to have you with us here. You know, when you were with us on the program, you were jokingly saying taxation always is a googly, and we don't know. And one hope, you're saying you hope nothing is done, things are going great, etc. It's both have been done. Everything has been done. STT on FNO and short term, long term. Your view in terms of how this changes anything, if at all.
Yeah, so we are open to tinkering of everything, any point of time. So there are two things. One is capital gains, and then second is the capital gains tax. So markets are all about capital gains, and that story is not impacted. The good thing is that capital gains per se will happen irrespective. And then once you have the capital gains, then whether short term, long term, speculative, then you pay a little more. So I think as far as the market side is concerned, where capital gains are made, I think that is pretty much protected. That's what I would think, because capital gains is about corporate earnings growth, liquidity flow. I mean, those things that story is very intact. So I would think that they are looking at it that the real boom is happening in stock market, and hence let's take cream off the top, and they have increased the long term, short term. I think speculative gains, in any case they are taxed at the marginal rate. There is no more scope. But I think the biggest story is about the buyback. If the buyback tax has been abolished and it has to be taxed in the hands of recipient, in that case all the buybacks will go, instead of 20%, it will go to 12.5%. So where is the dividend now? Which management would be encouraged to pay dividend and get taxed at 38%? So I think there is going to be a massive arbitrage between 38% and 12.5%. So let's see. I mean, we have not seen the fine print. Only abolition of buyback tax has been removed, so it will be in the hands of recipient. But let's see. I mean, what is there?
You know, Raamdeo ji, actually, I was looking at the fine print because I was looking at a lot of these tax issues that have happened. The fine print says that buybacks are going to be taxed as dividend in the hand of the recipient. And what is the prevailing regime for dividends? It is the slab rate. And the highest slab rate for, high-income earners is, 38% right now as per the new regime. So I think the current interpretation is the arbitrage is completely gone. Even if you want to enjoy income from buybacks, you have to pay 38% tax. I think the difference is that what they're saying, that the cost of acquisition of that share that you'll eventually tender in the buyback, that will be treated as a loss. So you can offset that loss against your other capital gain. That's the fine print that I got. I mean, speaking to a lot of tax experts after the speech. But my question, just to come to Mr. Agrawal's earlier point, sir, you were saying taxes are fine as long as there is capital gain. So let's address that. Does the rest of this budget give enough impetus for this market to really move into a new trajectory? The flows are there. We've discussed that with you. You're saying taxes can be handled. But what about, a fresh impetus?
Yeah, so that is due to the corporate earnings. So they have done nothing which will hurt the corporate earnings. If anything, because there is a dole out to all sections of society, I think there will be some impetus to the consumption, which in any case was reviving from the rural side. That's what RBI governor was saying. The revival was there, and with a good monsoon and hopefully little lower interest rate. I think, and the handouts which we are seeing across through the standard deduction and rationalization of rates, I think there will be some money in the 25,000-30,000 rupees in everybody's hand to spend more. So hopefully there would be some, at the margin, some impetus to the consumption.
Raamdeo, this is Reema here. Did you speak to any foreign investors? What is their take? Because for them, the post-tax attractiveness of the Indian equity markets comes down, especially when you're competing with other emerging markets where you don't have long-term capital gains tax to begin with.
Yeah, again, I think it is a capital gains tax, but I think like any other investor, they would also be more interested in the capital gains first and then capital gains tax. So if the macro story of corporate earnings growth of about 15 to 17% that remains intact, I would think that this negativity which has developed for a few hours right now, it will be shrugged off maybe in a day or two. That's my thinking.
But Raamdeo, the problem is, FIs were sellers till say 2 months ago, and you had made this point, they'll come in and they'll come in at higher prices. They did. and suddenly out of nowhere this taxation comes.
Yeah.
It could derail the story a little bit, because in the last 1 month or so, India's been standing out. We have even got a couple of $1 billion. Other emerging markets, actually, they've seen selling. Do you expect them to keep the faith and they'll take it in their stride?
I would think so, because see, right now the story is that of not capital flow of foreigners. It is the more of the domestics, and actually for last 2 months, domestic flow has been record flow, and investment has been very low. Actually, if you see the July month, domestics are not bought anything. And even in June, I think they bought little, but the flow has been extremely robust. So all the mutual funds are sitting on very good quantity of cash in across the schemes, maybe 5%, 7%. So ahead of the event, knowing that there is going to be bad tax proposals, everybody was sitting on fence. My sense is that if the corporate earnings are not impacted, they have to come and buy because the flow is still on.
Yeah.
So it is the domestic flow which is going to decide the fate of the short-term direction of the market rather than the foreigner flow.
Right. Now, got that. And it is all retail. I mean, Nimesh had put out a piece, I think this was last Friday, that mutual funds are sitting on some 1.25 lakh crores on as far as cash levels are concerned. I mean,
but he also
overall.
made the point that that's still about 5% of the AUM.
Of the
It's
AUM.
just that the AUM has become so large that a 5% is still a mighty 1.25 to almost 1.5 lakh crore
And it takes
now.
a lot more to move an index at 24,000. So yeah, I mean, that point is taken. But yeah, mutual funds are sitting on cash. Raamdeo ji, just a quick word on real estate. This entire indexation benefit being taken away. I know you're not a big fan of sort of real estate in that sense, for other reasons. But what is your sense?
Incidence of tax. I think they don't have any intention to give any tax break to the guys who are making capital gains. They have definitely increased the taxes for anybody who has got the capital gains, whether it is the real estate, whether it is shares, everything. So, I'm quite sure it will be detrimental to every asset class if you look at from the prism of capital gains.
Dharmesh, just react to those 2 points. One is attractiveness, as Reema was saying, and Raamdeo ji was also pointing out, from a foreigner perspective, how does this LTCG hike make any impact? Does it have any impact? And second is the change for real estate. What are the implications in your view?
See, as Raamdeo ji rightly mentioned, people come here for capital gains, not worry about what tax they pay. So if they see they can make decent returns of 20, 30% or more, they're happy to pay more 2.5%. And generally, the long-term FI holders don't come in any country just because of tax benefits. First objective is to make money. I think so that story is intact, as Raamdeo ji mentioned, and I think so government has not done anything which derails that story. Now, just one more point on the buyback. When we were talking about buyback taxation issue, I'm still confused. What happens if a company announces a market buyback?
Correct.
Nobody knows whether you're selling in the buyback or you're selling in the market.
Yeah.
So what you may see is that the tender may shut down, but the normal buyback will continue. In fact, this is the good positive news for actually companies to do buyback from the market now. Because then they're going to be taxed at a lower rate, and the investor will be taxed at if it's long term at 12.5%, not the 40% dividend tax which they are paying.
So if you're selling in the market, you get taxed, and you don't know who's buying on the other side. So both seller and buyer end up paying the tax, right?
Yeah, but I'll pay a long-term tax, right?
Yeah,
Only
correct.
pay dividend tax or 40% tax.
Correct.
In fact, I'm happy to sell in the open market and instead of in the lieu of the buyback through tender route. This is what I understand from the fine print. They're not mentioned what happens when you sell in the market.
Okay.
So you just shut down the tender route, buyback route, nothing else.
Okay, so buybacks through the open market. And in fact, that was one of the asks that, do away with this so that that confusion sort of doesn't exist. But what we've got is a very different facet. Dharmesh, just the point on real estate as well, till there's further clarity and absolute clarity on this indexation piece. I mean, what's your sense? To any extent, does it lead to a slightly more medium-term cool-off when it comes to property stocks? What is your expectation on this?
Well, as I understand, the newer properties won't get impacted, right? It's the older
Correct.
property. So if I'm buying the newer companies, I'm buying for the new projects they're launching, not for the old ones which they have. So this is bad news for the individual owner, which owns because of ancestral property or he's been owning from last 10, 20, 30 years. But the new projects coming in won't be, getting that tax issue.
So you think that this
Who
is
knows, in the coming budgets, that can change also eventually.
So you think this is more of a knee-jerk? Because, I mean, the overall announcement seemed a little negative without indexation, but you think this is more of a knee-jerk from a, real estate stock point of view?
Yes, because the stocks you're buying here are for the future growth rather than the past.
Okay.
Got it. Raamdeo ji, any other sectors your team is highlighting? I mean, there's something done for gold. Stocks are rallying. Any other sectors come to mind?
I heard the entire budget speech. What we could figure out is that, of course, the gold jewelry has become, I think, the taxes have gone half in that, from 18% to effectively 9% or something. I think your own analyst was saying that.
9%.
So that was one, but basically there is no relief anywhere. I mean, there is no freebies anywhere unless something by mistake, like this buyback thing, I think the buyback thing, if you do the open buyback in the marketplace and you surrender shares and you pay 12.5, I think it's the end of dividend. I think just the arbitrage is too big. And the dividend is not decided by small guys. Dividend is decided by the management. So if the management has to pay 38% of the dividend and if you have to pay 12.5 for the buyback, I don't know what will be the story of dividend. So I think it's a much broader issue, much bigger issue, because in dividend discount model, dividend is everything for the market. So it's a big thing. I think the subject, whatever they might have proposed, even if there is some loophole or unintended benefit which we are seeing, I think they will try to plug it and make it as tax intensive as the dividend is right now. So once that is done, then there's no arbitrage. Otherwise, there is a massive arbitrage.
Right. Raamdeo ji, since you're saying this is a big issue and a broader issue, can you, in very simple words, explain what has happened and what is this arbitrage? I mean, how does this work?
Yeah, so, dividend is decided by the management.
Correct.
Now, management declares dividend looking at their own corporate tax rates. Okay, they pay 38%. So if they can buy back they can surrender some shares and buy it back through the company money at 12.5%. So they would do that. No, one thing is it reduces the number of shares in any case. So the EPS of the future outstanding shares in any case go up. Is the healthiest thing to happen. But I'm doing both the things right, in the sense that I'm cutting my tax rate and I'm reducing the number of shares in the marketplace while holding the same percentage of the company. So I think it's a huge arbitrage. I think let's see in what form finally it comes. Right now it is just a proposal, abolition of dividend distribution tax. But when it is in the hands of recipient, how the exchequer is defining it so that there is no arbitrage left between dividend and buyback. I don't think they have intention to make buyback very attractive in the hands of management vis-a-vis dividend. That is not the intention at all.
No,
let's see in what form it comes.
No, I completely take your point, sir, because if that is sort of a backdoor route that the market tries to sort of come up with, perhaps we'll see more action from New Delhi in the annexures and the subsequent sort of prints that come in. And remember, I mean, the budget still has to be passed, and a lot sometimes happens when the final sort of passages happening through Parliament. Dharmesh, one more point. Now, angel tax has been completely abolished. Of course, you're in the deal market. You bring so many companies to the listed space, right? It's becoming very, very simple now, once again, for startups and unlisted companies to go back and raise capital in the private universe. Should this have any bearing on the IPO pipeline funding appetite? Because this is, I mean, I think they've got, amongst most participants, they've got the best deal. The whole tax has been taken away.
In fact, there's one more, tax announcement which has happened, which we are still trying to check, saying that, the unlisted segment now will be taxed at the long-term capital gains. So basically now, if you're selling before your IPO, you'll still be paying only 12.5%.
Absolutely.
Which was not the case right now, which was 20% right now.
So the private equity markets become very, very interesting, right? From an investor point of view, I had to write, I mean, up till now, it was 2 years of holding and paid 20% long-term gains on unlisted shares. But now it's 12.5%. So listed, unlisted is at par at 12.5%. What implications, what do you foresee in the coming weeks and months on the private equity side, both from the company standpoint and the investor appetite standpoint?
See, it becomes very attractive for private equity guys now to invest in companies because they get an exit route even before the IPO and at a much lower tax rate. So in that sense, it's very positive for the country also because more money can come in prior to an IPO, which is much required. So that overall, actually, it's a positive thing for the inflows to come in this, and this will be more long-term money rather than short-term money coming in.
Yeah, no, got that. I think we'll wrap it up here. Dharmesh, thank you very much for speaking on this important day. Appreciate your time here. Raamdeo ji, great having you with us. Appreciate it. Gautam, appreciate you joining us as well. Thanks indeed. We'll take a quick commercial break, but you are watching our budget coverage from the CNBC-TV18 Motilal Oswal studios. We'll have Nilesh of Envision Capital with us. He's right here. And Nilesh, thanks for waiting. We're going to come back after this break and continue the budget conversation. Stay with us.